Alright, so there is a tsunami of debt defaults that are going to be coming down the pipe here very soon, which is going to add to this national debt. So, roughly 25% of consumers are putting groceries on buy now, pay later credit cards, which is immensely scary that roughly 1 out of 4 people are putting basic necessities on a credit card. 90-day defaults on credit cards have doubled since 2020. 90-day defaults on auto loans has risen above pre-pandemic levels. Student loan delinquency is up to 12.88%, and it's now able to be garnished from wages. And government workers are about to miss their first full paycheck on the week of the 24th of this month if the shutdown isn't resolved. That's just some of the major defaults that are coming down the pipeline. As you can see from this chart, roughly back in 2020, pre-pandemic levels, or during the pandemic, you can see how much rents have went up, how much mortgages have went up, how much car payments have went up, how much average natural gas has went up, electricity, the cost of a soda, and yet the only thing that's held its value and hedged itself correctly is gold and silver, which most gold and silver bugs will say, told you so. So with those numbers though, you're actually able to make a little bit of projections and a little bit of calculations. Obviously it's not set in stone, but it's usually pretty close. So if you take the above numbers and look at the increases, you can kind of project what's coming in 2028, 2030. But all of this doesn't factor in what I was just mentioning earlier about all the defaults and debt coming down the pipeline. The government shutdown is approximately costing $2.1 billion per day. So as you can see, we're 12 days into the shutdown, so roughly $25 billion in cost, which is going to lead to some bailouts, kind of like the '08 mortgage crisis when different banks had to be bailed out to keep the spread from falling and bringing down other banks, basically because they over leveraged themselves in toxic mortgage-backed securities, and that propped up the whole mortgage industry. So this is very similar. The difference is, instead of bailing out banks, we're already starting to bail out nations. Argentina was just bailed out by the U.S. Treasury for $20 billion. They're losing about $500 million a day. So basically the $20 billion we just gave them will get them about 45 days before their economy either has to recover or further intervention is going to be needed. So I anticipate that they're just the first nation. They're kind of like the Lehman Brothers or the Bear Stearns of the '08 housing mortgage collapse. So there'll definitely be others added to this list. As you can see with the things I mentioned earlier, there's going to be some other bailouts likely coming. But so far we're at $20 billion in total bailouts. It's cost about $25 billion, and the government shutdown, so we're about $45 billion currently. And then down here, a few more projections. 2008 national debt increased by about 7 trillion. During the pandemic, it increased by about 12 trillion, not quite double. So probably going to cost us about 22 trillion this bailout once it's all said and done. But as you can see, metals have done a pretty good job since 2000. Silver on year average is up 632%. Gold and silver against the Dow. Dow is kind of tanking. Gold and silver holding their own. In fact, doing really great. But all that's going to contribute to the national debt, unfortunately, which you've also got energy prices, which soared to the highest possible level, set a new record. So definitely looking about a 40% increase in energy costs when people are already putting groceries on a credit card and already defaulting on their credit cards. It's only going to compound the issue. This is probably one of the more scarier charts relating to inflation. This shows clear signs of backwardation in the silver market. So this substantial drop right here is very concerning. This means that traders would essentially pay a much higher premium to take possession of precious metals today than they would to take a discount and get them 3 months from now. So it's probably one of the clearest signs of backwardation. It's a huge spike of disparity between the price of where silver's at, the supply. It's likely going to squeeze much, much further. Um, Going back down to this one, probably going to be a lot closer to the $73 per ounce. You can do some quick calculations if you really want to know where those prices come from. We'll just go to silver. You just go for the one economic collapse. So 2008, $14.99. 2012 is kind of when it recovered and all that printed money kicked in, and you've seen the spike. So if you just take $14.99, which was the average price in 2008, and there's roughly 4 times as much money in circulation as there was today, or excuse me, 4 times as much money in circulation today as there was then. So 14.99 times the 4 times, and then plus the most recent spot price, we'll just say 50.26, 110. So if you want to do the high of it, do the same formula, but this time it would be 31.15 times 4 plus 50.26. $174. So there's your range of silver. Quick calculation gets you pretty close. And as you see, I was a little off, 50.44. So it gets you close. It's just a quick little formula. It's not exactly a crystal ball or anything. But all of that, with the economic cycle collapsing, kind of ties into this stuff. So this is XRP, which in legislation has been passed. There's been numerous ETF filings, and this is me pretty much tracking the supply of it. Most recent price is $255. These are all these companies that filed ETFs to allocate into XRP. So obviously they're going to allocate a percentage of their portfolio into XRP. These are some public figures. So this is the total amount of assets under management, assuming all of these get approved. This is the total amount of money on the sidelines waiting to funnel into XRP. If they allocate 1%, 2%, 5%, 7%. Now, most analysts are saying 2 to 4, but that's roughly what they'd be looking at if they allocated a percentage of that percentage of their portfolio into US dollars. Now, if they converted that US dollars into XRP at the last price of $255, this is how much XRP they would be buying. And here's the total supply of XRP. So as you see, there's definitely a massive shortage. There's about to be a supply shock coming. XRP is a digital ledger that's going to be used to settle trades internationally, not trades, excuse me, wires. Where typically a wire transfer to another country took 5 to 7 days. There's a lot of fees involved in it. This settles in 3 to 5 seconds, and the fees are fractions of a penny. So it's definitely going to reshape global finance. They've already passed a lot of major legislation, hence why you see all this money under management waiting on the sidelines to start gobbling that up. The beautiful thing is the longer the shutdown goes, the longer these ones that are already live are able to absorb and accumulate all these prices. Another one to watch is SHIB. SHIB is completing a nice pattern. Here's how it completed the wedge pattern, and pretty much me predicting how it would go within that wedge, which, as you see, it totally did. So that was a nice little confirmation there. But this is where it gets a little risky, because not only did it complete the wedge pattern, um, but it hasn't spiked up yet. The MACD still hasn't crossed up yet. We're about into November, so until that crosses up, we won't see if it spikes up. It could break down completely and go the other way, but I'm anticipating it to spike up. Same thing with Bitcoin. A lot of people are worried about Bitcoin with their most recent flash crash that just happened, but as you see, the MACD is still intact. Here's a cup, a handle, and then we all know what it does after a cup and handle. It spikes upwards. So I definitely think there's still room in this cycle. Not only did it do the cup and a handle, it did a bull flag, which I highlighted right here. Here's another bull flag, which I didn't highlight. So you've got two bull flags on top of a cup and handle on the 5-year chart, which pretty bullish. So definitely looks like it's going to touch around 140 this cycle. We'll see how that goes. But pretty much all of the old money in the old system is flowing to the new money in the new system. And once that supply is gone, which we're tracking here, then there'll be a huge supply shock because all of this capital cannot sustain at that price without the price moving significantly higher. So definitely looking like some investments in the crypto space. HBAR is another one. NVIDIA just partnered with a few major corporations. In fact, one of their largest competitors. They threw $100 billion at it, and HBAR is basically going to be the governing crypto over AI. HBAR is very similar to XRP, low supply, it's just trading at like 16 cents or something. So those should go way up here in the future. So we'll keep monitoring that and seeing what all that brings. But as of now, that's what all the numbers show, that there's going to be a major economic earthquake coming, and looks like it's already happening with Argentina being bailed out. So we'll keep updating that.